Namaste, Jagdish.
Namaste.
On behalf of IHF, I'm very thankful कि आप हमेशा हमारे लिए वॉलंटियर करते हैं और हमारी कम्युनिटी के लिए कुछ ना कुछ जहाँ पे फाइनेंशियल बेनिफिट्स हों, इनकम टैक्स रिटर्न्स हों, you have always supported our community. And on behalf of IHF, I want to thank you and welcome you to this session of benefits for seniors who are 64 and above. And I would like to introduce you to our community members who are new. Jagdish has been in Canada since past 20 years, and for past 10 years he has been a practicing CPA, and he has proven to be an asset to our community. Jagdish comes from Nepal, basically, and he has made Canada and Calgary his home. And this time he has kindly volunteered to support our seniors while the year is ending. So those seniors who are nearing the age of 65, there are some benefits which they can avail from Canada government. And Jagdish ji will be talking about that. And we are open to take questions from the audience. So in case you have any questions, please feel free to contact us on this chat or later after the session as well. Jagdish ji later on can also be contacted for his personal advice and consultancy at unit number 12, 4852, 50th Avenue, Northeast Calgary. And his website is www.jc-accounting.ca. He can also be reached via email at jagdish@jc-accounting.ca. His phone number is 403-616-3165. With this, I hand it over to Jagdish ji. Thank you so much, Jagdish ji, and welcome to the session.
Thank you, Sonia ji, and International Hindu Foundation giving me for this opportunity. And as Sonia ji already explained, we're going to talk about the senior benefits available in Canada. And so we're going to start with the senior citizenship benefits in Canada, defining who are seniors. So basically in Canada, people age above 60 or 65 is treated as a senior benefits, and they will start getting benefits from Canada as a senior citizen of Canada. So we'll be talking retirement benefits in three parts. One is Canada Pension Plan. Second one is Old Age Security Program. And third is Guaranteed Income Supplement. So Canada senior benefit is based on these three pillars. We call them as a CPP, OAS, and GIS. So we'll start with the CPP, Canada Pension Plan. So I just want to let you know a brief history of Canada Pension Plan. It started in 1965 with the assumption that it will replace 25% of average earning living in Canada. And that was redesigned now. It was to cover 33% of average earning. And the eligibility, what are the criteria you have to have this Canada Pension Plan? One is you have to have 60 plus age, and you must contribute to at least one paycheck to Canada Pension Plan. What I mean by one paycheck means you have to work as an employee in Canada at least one pay cycle to qualify for this. And you have to have live in Canada at least 10 years to qualify for Canada Pension Plan. So these are the three criteria. You have to live in Canada 10 years plus. Second, you have to be 60 years or 60 years plus. And you must have to work as an employee in Canada for at least one pay cycle. And Canada Pension Plan is contributed in both sides, employee and employer. That is at the current rate is a 5.95. So if you pay $5 for 95 cents from employee, employer will also pay 5.95, and it goes to the Canada Pension Plan, and they will invest that. And for 2023, the maximum limit for Canada Pension Plan is $3,754.45. And if you make up to $3,500, there is no need to contribute in Canada Pension Plan. And self-employed has to do both employer and employee. The second one, we're going to talk how much benefit we get. That's the most important thing I believe we're going to talk about today. The age so Canada, how much you're going to take it depends on when you're going to start taking Canada Pension Plan. You can qualify to get Canada Pension Plan when you reach age 60. And you have to take it before 70. After 70, you cannot take it pension plan, postpone. If you reach 70, then there's no chance you can postpone your benefit withdrawing from the government. And how much you can take it. So as of today, if you are age 65, the maximum amount you can get is $1,306.57. If you work 40 years in Canada, that's the maximum amount you can get. But in average, what Canadian people are getting in average is $770 per month. That's the maximum people are getting.
So that is up to 14 years of working in Canada.
Yeah, from 18 years to 65 years, if you live in Canada and you work throughout your life, and contributed your full amount of CPP, then you will get the maximum amount. Okay. Normally, people like us who came in middle of their life, work 10, 15, 20 years, they get around $500 monthly. But the average now in Canada, how much people are getting Canada Pension Plan who live in Canada is $770. That's 23. As I mentioned, you're working while receiving the Canada Pension Plan. If you work, you can get the Canada Pension Plan too. While working for, what I mean by saying that is that I'm 65 years old and I have applied for the Canada Pension Plan. I can get started this Canada Pension Plan, and even I work as an employee or contractor or self-employed and make money. I can earn money. That I can do, but you cannot defer your contribution after the age of 17. You have to take the Canada Pension Plan. You qualify getting a Canada Pension Plan at the age of 60. You qualify and you can postpone till the age of 70. After that, you cannot defer your pension plan. You have to take it.
Do they give 5% raise every year?
What do you mean by first?
If you don't get your pension at 65 and you wait till 70, is there a 5%?
No. Okay. I'm coming to that one. How does it work? You qualify to get CPP age 60. Okay. And if you don't take money in 60 and every year you postpone, you get 7.2% incremental every year. 7.2%. So that's what it is. So how the Canada Pension Plan works is that you reach 65, you didn't take a pension. The Canada Pension Plan, Service Canada, how does you take? You take your base contributing year to calculate your Canada Pension Plan. And Canada Pension Plan, Service Canada will deduct or take out 8 worst year where you have not contributed or you have not worked. That will be taken away, and the rest, whatever you have, that will be taken into consideration, and they calculate the Canada Pension Plan. So that's what it is. And if you reach 60 plus and you still work and you pay Canada Pension Plan, that will add to your benefit, which eventually increase your Canada Pension Plan over the years. So that's the one. And Canada Pension Plan is a taxable benefit. You have to pay tax on it. It's not tax free. That's a taxable benefit. That's what you are talking about. You have to pay the tax. Okay, how to
I
say?
was talking in general,
Okay.
when a person is paying high taxes, how to reduce them? That was my question.
We'll talk about that. That's a different story. So Canada Pension Plan is a taxable benefit. And when you apply for the Canada Pension Plan, you have to let the Service Canada know whether you want to deduct the tax or not. Normally, I advise my client to deduct $10-20 per pay cycle. So you will be having some tax benefit at the end of the year. For example, what I mean by that is that pay ask Canada Service Canada deduct $25 from your each Canada pension plan, and at the end of the year, when you file a tax, you'll get some money back. Otherwise, you'll be paying a little bit tax.
So when we get, let us say we are getting $1,300 per month once we have CPP.
Yeah.
So when we get those $1,300, so that would be approximately $15,000 in a year.
Yeah.
Will it still fall under the income bracket for taxation or not?
Yes, it will. But how the Canada taxation system works in Canada, they tax you from the zero. And they will give you non-refundable tax credit, which will offset the tax you're supposed to pay on the 15,000. So at the end of the day, what happens? You'll end up paying no tax. That's what it is.
Yeah, that's what I thought.
Yeah. It's Canada tax you from the $1 and keep taxing the more you make money. And in meanwhile, give you a it's called non-refundable tax credit. So it gives you back. That will offset your tax payable. So at the end of the year, you don't pay a tax.
Is that taxable as well?
Yeah, that's a credit is non-refundable tax credit.
Right.
That's based on your living standard. So that's what it is. That's government has basically what to make the life more easy. Up to $7,000-8,000, you don't pay any tax in Canada. There are certain benefits, like when you get this case, Canada Pension Plan, when you calculate tax, this is deducted from your income. Technically, this is not the contribution you made to the Canada Pension Plan is not taxable. Suppose you made a 50,000 and you contributed 3,500. So your taxable amount will be 50,000 minus 3,500. 46,000 something is taxable benefit. And then you come to the non-refundable tax credit, depends on your family size and depends on the province where you live. There's a two tax, one is a federal tax, another provincial tax. Each province has a different tax. Right? So that's what it is.
What if a woman has never worked in her life and she depends for everything on her husband's paycheck? Still, she gets spent CBP
No,
pension.
no. At the very beginning, I said you have to live in Canada at least 10 years and at least you have to work one pay cycle. At least you have to have. Canada Pension Plan is a contributing member-driven fund. It's your money. The more you put in the Canada Pension Plan, the more you get. If you don't put anything, then it's zero.
Now you said minimum one paycheck should be there.
Yeah.
So if a woman has worked only for a month and then she has never worked, still she has
Yes, still she'll get a Canada Pension Plan.
what will be the pension amount?
It depends on how much you have contributed. You're not going to get a $1,300.
Oh, okay.
Not going to get. It depends on that.
What if she becomes a widow?
Oh, that's a different story again.
Okay.
I'm coming in at that point too.
Okay.
I'm coming because if so, they will get a survival Canada Pension Plan. Whatever your husband or spouse is getting Canada Pension Plan, same money will transfer to the widow, and that's a taxable too.
Yes.
Yeah, I'm coming in the CPP debts. That's what we have here. Canada Pension. Suppose a person who live in Canada 10 years and he qualify everything and he is getting CPP, for example, Canada Pension Plan, and all of a sudden he dies, what happens? So the Canada Pension Plan gives you a one-time $2,500 as a funeral cost. And it will goes to the, if he has a will paper, goes to the will paper, or it will go to the trust fund where the money will go. Otherwise, if you have nothing, then they'll go to the closest relatives who are either son or widow, wife, whatever. That's a one-time benefits.
But don't they have to nominate it? You have to nominate it if the guy without will or something.
That's why I said if you have a will paper, it depends on the will paper. Second, normally if a people die in Canada, he has to file a final tax return.
Right.
And that has to go through the trust. It's called trust fund, trust account. For example, X is working in his life in died, then his trust account will be X trust account. And whatever property, whatever he has, everything goes to that trust. And trust will file tax and pay the obligation, whatever, everything they pay. Whatever the remaining or the left money, that will be distributed to their family members, wife, each per their will, if he has a will.
Why it has to go to the trust fund?
That's the rules.
That's the rule.
That's the rules. So how does it work is that if a person die, he cannot sign a paper and he cannot find a tax. So what the government has designed.
When he's alive, he's paying taxes every year. And he dies in the middle of the year.
Yeah.
So those 6 months are there. So he'll have to pay taxes for those 6 months.
No, what happens, suppose he dies in the middle of the year,
Yes.
for example.
Okay.
So let's say he dies in 2022 January. No, say June.
It's calendar year.
Yeah, half of the year, right? The year tax is a calendar year, January to December.
I go.
So what happened is when he died, he's gone. Nobody's there, right? Then government, either you have to go to the court, get the, it's called trustee. It's called trustee. If there are certain situations, you have a will or you don't have a will.
Okay.
If you have a will, everything governed by the will. You don't have to, whatever is there, will, that will govern. If you don't have a will, then you go to the court and get a will, trustee.
So it's like a probate.
Yeah, probate.
Like
And
probate.
yeah.
Okay.
So what happened is that that trustee will be treated like a trust account, and whatever his income, everything goes to this trust account. And trust will dispose all his property and pay all his liability, and whatever the remaining amount, that will be distributed after tax. For example, the person who dies has a house, for example, and his house cost is $200,000, and that house current value is $400,000, and he has $30,000 loan. He may have a credit card payment. He has so many things. So everything go into the trust fund, and the trustee will manage all these things. He may dispose his property. He may pay his credit card loan. He may pay his
Taxes.
loan, everything. Then he will file his final tax return. That's called trust T3. There are 3 types of tax we file. T1 as an individual we file. T2 is corporation company. T3 is trustee. They file trust and paying all the tax, every obligation that person has to do, and whatever left over, and will be distributed among their family members.
Is it mandatory to create it just because if person goes away, his son will take care of everything?
No.
No.
But
He cannot file return on behalf of his father and pay the credit card payments on behalf
Only
of
if
his
it is
father.
written in the will.
Huh?
Only if it is written in the will. Then
Otherwise,
he can do it.
otherwise it has to
Otherwise,
be
no. Otherwise,
created.
they cannot do it.
It is not like India, the way you automatically think that son will take over everything and
Doesn't go that way.
It doesn't.
What happened is that biggest here is that I always advise to my client, have a will paper. In this country, you have to have a will paper.
Will should be from the lawyer or you can just go to the registry office and create a will.
No, you don't have to do it. There is a Law Depot website, Law Depot. You law depot, there is a law depot. You have to try a membership, do a membership. It costs you $30-40, or you take a membership today and do the days. Ask them you want to do. There's a step in a law depot website, or you can make it a will paper by yourself.
But does the property which is obtained by the child have to pay the taxes?
No, okay. I'm coming on that. First, let's talk one minute. Let's talk about how to make a will paper.
The registry office will does not work. So
Yeah, it will work. There is a kit in the registry. I
they can
think,
book it,
yeah, I think it's a $99.
Yeah.
But you get a cheaper than the law depot. Why you want to go to registry? It's a ready-made. What you need to do in a law depot, log into a law depot, go to the create a will paper, just fill up your name, details, whatever you want, and it will give you a ready-made will paper.
Sign and approve.
Then you print out, sign it, keep it.
If it's a simple one.
Simple one.
It's just signed by me
You and there should be a witness.
and a witness.
Witness.
It's not by any registration.
No, if you want to do a notarize, you can do it, but not required. Even in Canada, if you have written in a handwritten paper, you have written kind of will, still that is valid.
Oh,
Yeah, that is still valid. But you have to have something. That's what it is. The best and cheapest way is to go to law depot. It doesn't cost you anything. But if you go to the lawyer, it costs you $2,000. That's what it is. So your question was the capital gain tax, right? Yes, there will be capital gain tax.
obviously.
Obviously, that's why you have to have three. It's a trustee, it's a one legal entity that takes all the guys who died, property, obligation, asset in that basket, clear out all the pays, everything, and whatever the residue that is being paid to his wife, widow, nominee, whatever it
And
is.
that is not taxable. Is that taxable or not?
No, that's not taxable.
But if I am still alive and I just pass on my house to my son's name, then
It's a taxable.
then taxable.
It's a taxable. How does this is not in cover here, but I can explain you since you guys. How does it work? Is that suppose I have a house.
Yeah.
I'm living in the one. I have, let's say, two houses. I have a one house where I've been living throughout my life. I never rented. This will be treated as a principal residence.
Yes.
And if I sell it and I make it 200,000, 300,000, that's tax free. That's
Then-
Appreciation.
tax free,
Taxable. Okay.
no tax. If I'm living in the house from the day I bought it to the day I sell it. And if I sell it and make it say no matter how many money make
How
it,
much money you make.
make tax free. Right?
But if you give it.
But is there a minimum time period to live in it?
Was that?
Is there a minimum time period to live in that
No,
house?
no.
At least 1 year or so?
No. There's a one rule, the new rule is
I buy a house, live there for only 3 months and then sell it.
You cannot do that.
That's what my question is.
No, you need-
you used to have that. Now that will be called as a flipping rules. It will be taxable. Whatever money you,
Like 1%. Like this.
that will be your taxable income.
Because if I'm selling, you said if you are living in the house since the time you buy it and until the time you sell it, that is 3 months period. So
But you didn't say, if now, since last year, what happened in Canada, there are a lot of people who bought a house, live 1-2 months and sell it for and make
Especially
a
in BC.
lot of money.
Yeah.
That's applicable mostly in Toronto and BC.
Okay.
And even some extent it's happening now in Calgary, Alberta. So what the government came up,
They change the law.
they changed the law, and if you bought a house, you have to live at least a year.
yeah,
If you sell within a year, then it will be treated as a flipping property, and that income will comes into your taxable income, and you have to pay tax.
if we live at least 1 year, then it's okay.
Provided you have a 2 house, 3 house, you can claim the residency only for 1 house.
One.
You
All
cannot
other-
claim 3 house. That's what it is. And regarding, you're saying your second question was that if you give your property to your son or daughter,
Yeah.
what happens? The day you give property to your son or daughter, this is treated as a dispose on that day, on the basis of the market price.
Okay.
What I mean is that suppose you brought a house for $3,000,
Yeah.
and you are giving to your son,
Okay.
today, after 5-10 years, no matter, then that will be treated as a disposed property, and that will be well under whatever the difference between your purchase price and sale price will be treated your capital gain, and you pay on tax.
But I was already living in that property.
That I'm coming there. So on that day, you dispose the property, say 500,000, that's you give it to your son. Son will not pay tax, in cost of the property will be $5,000. But if you live 100% in that house, the $200,000 is not taxable capital gain. You don't pay tax. If you live half of the year, say 4 years, whatever, if you didn't live in that house, then you pay tax. Proportionately, how many years you live there, that will prorate that on that basis with tax.
Yes, that's what I want to clarify. I bought the house. We are living in the house. My son is living in my house, and there is only one house that is a permanent resident. And maybe after 5 years, I will just transfer it to my son. And still, it's not no sale, no profit. It's still our permanent resident.
No, then you don't pay tax. But from the tax point, when the day you transfer the title to your son,
Yeah.
that will be treated as a dispose of the property,
Yeah.
and he will have a cost of that on that price, fair market price. And when you file your tax, you'll file a form 2091 where you will say this is 500,000 your cost price. You put the address and you put your selling price, and there is a bottom where you say primary resident, and you don't pay tax.
So neither me nor my son, anybody.
No, nobody pays tax.
So if you're living in the house, you have to pay that to your son.
That is not mandatory.
That's not
It is
mandatory.
mandatory.
It's
Is
not.
it mandatory?
It's
It's-
mandatory.
What is it?
If, as he said that, okay, if he gives his house to his son and he's still living in that house, so the house belongs to his son.
Yeah.
So he has to pay rent to show that he's living there because the house belongs to his son. It does not belong to him. Get it
I
right?
know. I see what you are saying technically, but it's yes and no. Yes and no. Because son is living in this house,
Yeah,
right?
if he's living there, it's fine.
And he's living as his parents, so he
Then it's
doesn't.
fine. If the son is living in a separate house.
Oh, then yeah.
And
No, I'm talking about same.
He's talking in the same
We have
house.
only one house. That's it.
And we all are living together.
Yeah.
Then it is different. Yeah.
That's what my question is.
Yeah.
First thing is that you have only one house.
So Jagdish ji,
Ajay.
just to add on to that. So for example, I know that I'm going to be 65 soon and you never know the time flies. So if me and my husband, we decide instead of transferring the title to our son, if we add his name to the house and if we become 3 owners of the house, me, my husband and my son, then it won't be considered as a disposed of property because
No.
our name is still
The day you change your title,
Mhm.
that day assume it's a disposed property.
Oh my.
Even if our name is still in the
Yeah.
title.
You are aiding a third party, right? You'll
Yes.
have 33% ownership.
Okay.
Your ownership will go back and your son will go out.
Okay.
This was my question coming, but you asked it.
Yeah, because that we generally tend to
No,
think that is
no.
a smart way of.
I was planning for that.
No,
Yeah.
that's not the smart way. Don't do it.
Yeah,
Done.
that's what I.
Don't do it.
Given the idea that if we add the son's name, then it's okay.
No.
No, initially, right when initially we buy the house.
The day you purchase the house,
We can do it.
and if you bring all your families together, then yes.
Then we can do it.
Middle of the way, middle of the year,
In between, you cannot do it.
it means you are doing.
Okay, so now we have one house. One house, we are all living in that. Suppose we want to change the house. We'll sell it off, buy a new one. At that time, instead of our 2 names, we'll buy it out of 4 names. Then it's good, right?
Yeah, what happened is that whether in that house, 4 of you have to live there 100%.
Yeah. That is what they say.
Yeah.
Just one property.
Yeah,
And they all. have.
yeah, no, I understand, but the house, we are missing here so many things.
Yeah.
We have only one house.
Let me clarify, it's a very simple. I have a one house, where me, my wife, my kids, everybody is living that house. And the house is owned by you and your wife,
Correct.
right? So you brought a second house, for example.
Changing house, not added house, we're changing the
You
house.
will sell this house and buy a new
Or if
house.
you sell this house and go to
Buy
the
a new
next house,
and
then you are fine.
Then I can add 4 names instead of
Yeah, yeah.
Yeah.
That's a new
That's a fresh,
house.
new
Yeah,
property.
new property.
best house.
But you cannot, if you add the fourth person in your existing property, then will it be treated as a disposed property.
But still, if it's treated as disposed property, it's okay because still we are living in that house. My son is living in that house. And
No, no, let's not include your son. Suppose you have a one house
Yeah.
and you have been living 100% the day you purchase to
Yeah.
the disposed day. So you can add your house onto this house and you will be 3 title,
yeah,
but this will be treated as a disposed house with the fair market value, but you will be not paying capital gain because that is your primary residence.
yes, we are living in it. My son is still living in it, so we don't need to pay anything.
Whether the son lives or not, that's a secondary because you own the house.
And we are still living.
But you have to declare in a tax.
Yeah.
If you don't declare that, they'll charge you 5,000 penalty.
So my son's name will be added into it. Does it impact his tax in any way?
No, doesn't impact. Now doesn't impact. In the future, when you guys sell, then whatever the capital gain you guys make will be distributed based on the use rate.
So
What?
coming back on his point, coming back, does any person who does that kind of thing at a senior age, does that make any benefit, or does Canada give any additional discounts on taxes?
Doesn't,
Okay,
no,
so
no.
there is no benefit.
No
of,
benefit, no
uh,
benefit.
I just wanted to get rid of the bill. So if just we add the kids' name in it, then after we are
No,
not
no,
here, they will automatically get the property. Simple.
No, that is not going to work.
Yeah, the mostly there is a way how to reach a tax planning. You have to go to the tax planning consultant, but what normally people do, they create a one company. It's called holding company, where all their family member will be member of this holding company, and all your property will be the owner by this company, and whatever the benefit will be shared by this. This company has many problems.
Yeah, we need a separate session for that.
And that company is charging monthly.
Yeah.
The owners.
No, not to owners. So that company will manage the property.
They will manage for the bank, they charge the managing fees, right?
Yeah, of course.
It's called like a trust fund.
Yeah, trust fund. Yeah, exactly. So that's a holding company that will rent out your property, everything, pay mortgage, everything. And if you work for that company, they will pay. Or if you live near that property, that company will charge you rent. All these things. That's what it
Is
is.
it beneficial to create a trust?
Yeah, it's a long term. It is.
So-
That's a good way of transferring property with the minimum cost.
Okay, so on this third point on your slide, you said if the contributed lived to outside Canada, which is in general our case, we have lived outside Canada, and we still have some properties outside Canada. So how does this international something you had there, if you could go on slide 9, was it on slide 9 or 7? What was that?
This is a retirement pension.
No, there was where you said the international settlement, something like that was mentioned. That
Okay, so how does it work here? We all coming as an immigrant, we have property outside of Canada, right? Up to the $100,000, we don't have to declare in a tax. If you have a more than $100,000, you have to declare when we file a tax,
okay.
and we have to give it details.
Mhm.
If we don't do that, and CRA catches you, they'll charge you $2,500 penalty.
Oh, yeah, penalty, hefty penalty.
Yeah. And when you file a tax, most of the tax account, if you don't go to a real good professional, they will just file, say he doesn't have any 100,000 property.
Okay.
But I always advise, if you have a property more than 100,000 outside of Canada, declare. There is a form called 1135. You have to fill up that form and send it to CRA. And you have to do that every year. The beauty of that is what happens when you bring that property to in Canada, it will be treated legal money. Although you have to pay a capital gain on again. Suppose you declare $100,000 today, and you sold that property for 150,000, then you can bring $150,000, but 50% of 50,000 capital gain is 50% taxable. It's not 100%. So on 25,000 you have to pay.
50% the main tax gain is that.
So, okay.
How much percentage?
Let me explain. So suppose you have a 200,000 capital gain.
Yeah.
You bought a house for 300,000, sold a house for 500,000. Then you have a 200,000 capital gain. Then 50% of 2,000 is taxable.
Taxable, how much taxable?
It goes into your personal tax, and based on the
It adds up as your income for that year.
Okay.
So it's
That's-
better to sell once you are retired, so that you don't have the real income here and then it accumulates as
That's a big
that is a big amount. So on that note, if I have a joint property with my husband, which is, let us say, 150,000, but when we split it, it becomes 75,000 and 75,000 only. Do we need to declare
No,
that as well?
as I said, told you, up to $100,000 you don't have to declare. 100,000 in $1 in it.
It will be.
It will be here. Tax in Canada doesn't include husband and wife together. They are treated separate individual.
It does not go in that amount, does not go into your tax bracket, whatever tax bracket you have.
Doesn't. It's what you are doing. You are declaring. You are saying Canada Revenue Agency, I have $100,000 value or more outside of Canada. I will bring it. When I will bring it, I'll pay you capital gain. That's what it is. Now you must be aware that India government in India has allowed you to bring whatever money you can bring into Canada, any part of the world, but they are charging 30% tax.
Right.
Now
Yeah, in India, they're charging.
India charging. You can bring all your money, but they're charging 30% tax now. Before that, you could have bring, but there was a limited. They don't allow.
But that is hidden money.
Yeah, there's so many things.
Okay.
Yeah.
Yeah, let's get back to the contributions and senior benefits.
Okay, I spoke about the Canada and the tax, it's a taxable amount. Then I talk about the CPP death and who should complete the application. It's your wife or the who has inherited the property. You have to, for this one-time benefit for the funeral cost, you have to apply, or you can tell your funeral organization they can apply on behalf of you. Normally it takes three months to get the money. You get $2,500
So
one time.
does Canada support some of that funeral cost?
Yeah.
25,000.
Okay. You are getting a CPP,
Mhm.
for example, and you die.
Yeah.
So your family member can apply to get $2,500
Okay,
as a funeral cost from Canada Pension Plan.
okay.
If it is above and over 2,500, then
Then you have to pay out of your pocket.
So my insurance company, for example, I have bought a life insurance. It says that it will cover up to 10,000 cost of my funeral.
Okay.
So then still can I apply?
No,
for
no, then
CPP?
it's-
If let us say, for example, the cost is more for funeral.
no, it depends how much income you have.
Okay.
No, it's a flat.
Low income people get that.
Not everybody got that.
Everybody gets.
Everybody got 25. Everybody. Those people who have contributed to Canada Pension Plan, everybody get
Everyone
that.
in CPP who is eligible for CPP
Very, very near to that.
will get 2,500.
2,500. Yeah. And if you have, and that will can be applied by the trust. And if you have a will paper who has the survivor or the wife, or you can talk to the funeral house, they do it.
So within how much time, for example?
It takes 3 months.
No, if let us say somebody doesn't know and learns about their benefit after 1 month or let us say,
You can always apply.
Apply for it.
For example, I'm talking about myself. My husband passed away. I'm not sure that I got 200.
2,500.
Not, no, I paid the whole amount. I know I paid the whole. So I'm not sure. Did I get that? I'm not sure.
I think you should apply for that. There's no harm.
So I check the funeral home.
No, the funeral home will give you a receipt of your cost,
Okay.
and there is a form in the
So on the
CRO.
invoice it will be written?
Yeah.
Whatever the invoice they give, and then I'll go and check the.
Yeah, and that will give you the total cost,
Okay,
and they will let you know whether the funeral home itself can claim that money on behalf of you and deduct your invoice. Suppose your funeral cost is $7,000, and if funeral home has claimed that $2,500, then you will be 7,000
then
minus.
that should be mandatory, that government should give them.
It's not government.
Mandatory.
It's a Canada pension plan. It's your Canada pension plan. It's your money.
So what, when you are showing them the will of a person but who passed away, in the will it is absolutely crystal clear that he was getting CPP and all that. So when.
No, okay. So let me talk to you, Sijas. If your husband is getting a CPP, you should get the same amount now. If you have not received, apply.
Yeah, so what you should do is go and check back your records.
No, I'm getting his widow, I'm getting a widow pension.
No, for the funeral
A
cost.
funeral, yes.
Yeah.
No, we do again. We are mixing everything. We do pension is something different. Canada pension plan, is that what you are saying? We do pension.
What I gathered is I get my CPP and my husband's pension subsidized by not, I don't get 100% of my husband, I get 30% less of his. My pension, his pension, plus if it is less, then it comes to 30,065. That's the maximum I get as a single person.
No. Well, let's clear it out. Canada pension plan. If you and your husband both work, I believe.
Yes.
Right? Your husband passed away, and you are 65 or say 60. You started taking pension plan. Canada. It's called pension plan. Are different meaning. There is a pension plan given by the government. I mean, our company where you work. If you work in the government, federal company, provincial government, there is a different pension plan apart
Just
from
simple
Canada.
CPP.
CPP, then you will get a survival benefit CPP
Yeah, that's
for
what
your
I'm getting.
husband and your one CPP. If you are getting this, it's okay.
But if the total of mine and my husband's is not 13, one thing
Oh,
I
that's
say
a
is
limit. We're gonna come with that. That's a,
They
that,
are giving me that much. They are giving me the maximum.
yeah. No, the government doesn't give you unlimited money.
No, no, no. They will give you less money. They will never give you more money.
Yeah, but so the more you make money or your income, less the benefit.
Yes.
But and that's what it. Okay, so I'm coming about how much benefit you will get if you take a CPP when you are age 60 and 70, 65 or 70. Look at it. Each year after 60, the year you delay, you get 7.2% increment every year. For I have an example here. For example, if you are 65 and if you are getting CPP $1,000, what happens if you take it 60? See here, you get $360 less. What happens if you get a 60, 70? You will get 1,470. At the 65, you get $1,000. If you take the same amount, the same condition, assume, if you take the CPP at 60, you get a $640. If you take the CPP at 70, you get $1,420. Every year, you get 7.2 increment up to 70 years. After 70 years, there is no increment. So my professional advice is if all this, when to take a CPP, it depends on certain factors, like your health condition, your financial position mainly. If you think you're not going to make it 65, then why you want to wait for 65? Take it right away. Or
What is
if,
the max? What is the max? What is beneficial in to get it early or getting late? What is
just
the-
I show you the one financially, you are getting less money when you take 60.
But overall, if you make it total, so what's the beneficial? Because I have no urgent requirement that I need to take it at 60.
Then every year your pension will be increased by 7.2%, and that increase will be remain throughout your life.
So that is beneficial, right?
Yeah, that's a benefit. You'll get more money, you take late. If you take money
So
early,
this
you
is what
get less.
I started taking at 60, so that additional 5 years I'm taking money, so
That's right. That's why you're getting less.
that's but overall as a combined total, which one will get you more money?
No, nobody can answer that question. I've answered.
No, no. What's your question?
Suppose I start taking at 60. At 65, it will be less amount, less than $1,000. But I have taken the pension for additional 5 years from 60 to 65. So
Okay.
that money is not contributing to my total gain.
What do you mean by total gain?
Usually my pension is supposed to start.
This is taxable benefit. You have to pay a tax on this. So I don't understand what your question is that.
If I stop working, due to some reason I stopped working at 60.
Then you're qualified to take the Canada pension plan.
I'm qualified.
And if you don't take and go to the 65,
Yeah.
then pension will reduce. Because this 5 years you have not worked, and when they calculate average, they exclude only 8 years.
Okay.
Suppose you live in Canada 20 years,
Okay.
you work 8 years, you didn't work 4 years, then the base 8 years will be taken into the basket and calculated to that
Then
one.
it's a loss if you start early. So it's better to start.
The more unemployed period, the less CPP, and the more you don't meet the limit every year, less that.
Okay.
I lost money on
Okay. Because you didn't.
I lost money on pension.
Yeah.
I did not take it 65. Because I was still working somewhere. So I said, okay, I don't want to take a pension. So I was working. It's a sequel one into my pension. So I don't want to add more taxes to it. So I kept on waiting and waiting. And all of a sudden I said, okay, let me go and ask. So after, I think so after 7 or 8 years, or maybe more, I asked them and they said, no, you're not doing it. They reimbursed me only for a certain number of years. Rest, it's gone. Then I said, okay, what happened to that? What happened to that amount? I said, only minister. If you can talk to the minister, if he approves of it, then we will give you. If not, it's gone.
No, that's a
I lost it.
No, I understand, but
I lost $10,000.
no, your is a specific case, right? You can go to always there is application, you can do that. But normally what the Service Canada does, they take out maximum 8 bad years out of your pension calculation. And suppose if you pay in one after 65, whatever the CPP after 65, the CPP contribution is not
I
mandatory.
was still contributing to CPP.
So if you're contributing to CPP, then your CPP amount will go up eventually.
But then in the end, they paid me. They said, oh, single person, that's only this much.
No.
Yes.
I don't know what's your situation, but that's
Big
not the rule.
discussion with them.
Okay.
I had a big discussion with them.
Hmm.
I said, this is my pension. Tell me how much is my pension? How much is my husband's pension? They said, because you are a single person, this is the maximum that we give. Because you are not the only single person that we are dealing with. It is the whole of Canadian. There are so
No,
many people
in the
that-
Canada-
So we give the maximum, that is the maximum that you get.
No, there's a CPP's maximum limit $1,300 that is there. But I don't know your situation, but that's not, this is your money, you can
This
get
is
it.
this is what I'm getting it now.
Yeah, so you need to talk to then you need to talk to the lawyer and go further.
But I lost $10,000.
Yeah, then you have to go to the lawyer.
Like I said, only the minister can, if he, you write a letter to the minister.
Okay, so now let's see, there's a condition. Usually I get a question during this kind of session that if I don't live in Canada, do I get a CPP?
Sorry, what did you say?
If I don't live in Canada, do I get a CPP?
जैसे हम सर्दियों में चले जाते हैं कि आधा साल मीडिया निकालेंगे.
That's usually I get the question.
Yeah,
That's the most important. So
Seriously, na?
above 65 and 66.
CPP means who are getting CPP.
Yeah.
So Canada Pension Plan is a membership driven and it's your money. No matter where you live, you get it.
Even if I'm staying in India.
No matter where you live.
And how long, it doesn't matter.
Doesn't matter. Give me a second. But there are conditions. Condition is you have to have a qualify for getting a CPP. first thing. And you have to file a tax every year. And you have to declare your income outside of Canada.
Yeah. If there is any.
And this CPP can go to your bank account of which country you are living if they have a
No.
tax treaty. Like for India, you can design your bank account, Indian bank account, and Canada Service Canada will send you money every time. But if you are not a resident of Canada, there are certain conditions you have to meet to get this. If you are non-resident of Canada, they deduct 20%, 25% tax at the source.
So how can be a person non-resident and still avail CPP, for example, person with work permit kind of situation?
No, you are Canadian citizen.
Okay.
There, for the tax point of view, there's a certain rules you have to follow for the residency. If you have a bank account, you have a property, you have your family, if you maintain a driver license, so many criteria. If you meet that, then you will be
Well, if
treated
you
as
sell your house and go and settle in India, that's the case.
after getting.
मेरा question ये है, I had mom with me. She was Canadian. Then she was quite aged. She went to India and she could not travel back for 2.5 years. So, and her pension was being deposited in Canada. She was not taking pension in India. Her pension was being deposited in Canada. So they had a doubt that she's an elderly lady. So whether she's alive or dead, we don't know. And still we are depositing pension in her account over here. So they wrote me a letter because I was the daughter. So they wrote me a letter that we need to see your mom. I said, my mom is in India. So he said, well, is she alive? I said, yes, she is alive. Okay, can she not help us? I said, literally come here, but she's not in the situation to come at the moment. She was not well. So in the end, what happened was I could not go. So my sister from England, she went to India, brought her to Canada, and then these pension people or government, they came home, they saw her, and then they said that for the number of periods she was in India, we are going to deduct that pension of hers. So she was getting $100 at that time. So they started giving her $350 per month.
Oh. I don't know why all this thing happened to you. No, but I understand what you were saying, but that's not the rule. That's not the rule.
So एक मिनट, आपकी मम्मी यहाँ पे CPP पूरा avail कर रही थी when she was working here as well, and then she moved pension CPP वाली.
She did not work.
So then that is not CPP. नहीं, फिर वो CPP नहीं होगा ना. If she did not work, then
she didn't qualify. So,
वो कुछ और
so what kind of pension she was getting?
वो और pension.
It's not CP.
Oh, that's
Here we are just talking about CPP.
I'll come to you. This is what I have explained now. That's the rule. I'm coming on that.
Yeah, let us because you have 39 slides, Jagdish. So let us get on to that.
Let's focus on the things.
Let us focus on what Jagdish is telling. हाँ, but CPP से related नहीं है. Yeah.
No, but I understand what you're saying. Revenue Canada or Survey Canada has always the right to check. And they can stop payment anytime if they have a doubt.
No, they reduce the payment for the number of.
नहीं,
No.
वो होगा. वो ऐसे होगा. If Jagdish, if I may.
Yeah, please.
वो ऐसा होगा because जैसे when we moved here, मैं अपने बेटे, my husband stayed back. मैं अपने बेटे को लेके वापस इंडिया चली गई. I stayed there for 2 years. After leaving, within 1 month, I informed CRA that I am leaving. So please stop my child benefit because I was not really entitled to that. I was not living in Canada. And when I will come back, I will let you know. So they stopped the child benefits at that stage. And when I returned, they resumed it. So because I was not entitled to that. So that is the same case. It is a benefit, kind of a universal benefit being given by Canadian government because she had not worked under CPP. So they are very correlatable from a child benefit perspective and an adult or pension benefit.
But they did not explain us that. They said we will take only for the period that she was in India. So she was already 100%.
No, but that was my own ethical thing to tell Canada that I'm not entitled, so I don't need it.
Okay, so let's
Yeah.
let's not go. So your case, what I think is that what happened is that she was getting a low income supplementary guarantee, and that time what happened is that now if you live outside of Canada, your pension will automatically stop, and you have to come back and refile everything.
Yeah.
So Canada pension plan, there are conditions. You have to have a 10 years in Canada. You have to have a tax file. No matter where you live, you get this money. Canada pension plan, because it's your money. You put the money. You have contributed money, and this is not managed by government. Nothing to do with the government. This Canada pension plan. It's a separate. It's like a, employee provident fund in back home. Exactly, that is what it is. So Canada pension plan goes with you, but to get this money, you have to file a tax. Certain criteria you have to meet. So second biggest benefit is the old age security pension. This is also start from 65. Before 65, you cannot get it that. You have to live 10 years in Canada to get qualified on this. If you're more, 65, and you get the more. It's the same theory like what the Canada pension plan. You have to live here after 10 years to get qualified for this, and you get the same money.
So this is not related to your income, but what you are.
No. This is nothing to do with your income.
And amount wise, how far it is from the Canada pension plan? Suppose I'm getting $400 from the Canada pension plan.
It's
Yet
old age pension plan and Canada pension plan, both are not related to each other. I'm coming here. How much benefit you get?
Yeah.
It's here. If you are 60 to 74 and you live 40 years in Canada, you get $698.60
Per year.
per month. And your income has to be lesser than 134,000. If your income is more than what happened, old age, once you at 65, in fact, when you start 66, complete 65, you get this money. And you can work. But your income is more than $134,000, then you have to pay back. It's called clawback. Yeah, you have to pay back.
With interest if you don't pay it.
Yeah. Okay, you are 65 years now, and your income is less, your family income, I mean, $134,000. And if you live in Canada 40 years, you get age of July to September rate. Every 3 months it increases. You get $698.60. For example, if you live 20 years, it will be half. What if this 698.60 divided by 40 multiplied by number of years you live in Canada? And you don't have to pay if you have an income up to $134,000. If you have more than $134,000, you have to pay back, and they charge you interest and penalty too. Depend on the situation.
Even अगर मतलब मैं नहीं ले रही हूँ, let us say कि मेरी income 1.5 लाख है, और मेरे को उनको कुछ pay
Like
करना
if you don't take this Canada pension plan, it's government funded plan.
Okay.
government pays you, you have to apply. And until if you don't apply, you don't get it.
Okay.
So 129,000 family income अगर ज़्यादा तो this is not applicable.
Then you are not eligible.
Not eligible.
यही होगा ना मतलब?
Yeah. Not you still get it, but you have to pay certain. You don't have to pay full amount. Certain percent they will calculate the percentage they'll pay you. When you file a tax, they'll automatically calculate and pay you.
But this is for individual or this is for the family?
Individual.
Individual. So then why family income? We should count my.
Just to give you an example, suppose you are 67, your wife is 65.
Yeah.
and your income is 130, lesser than 134,000,
Yes.
and if you live in Canada 40 years,
Yes.
you will get $1,400, both, each total in family.
Oh. Okay.
And if you have more than 75 years,
129 income, this is my income only.
family income, you and your wife.
वो
Family
आपने
income.
actually annual individual income लिखा हुआ है तो वहाँ पे वो लग रहा है कि annual-
Your annual income must be.
That's what I'm making.
क्या
नहीं
पता
सबसे नीचे वाला जो
Last line.
लास्ट टाइम इसके भी नीचे एनुअल इसके भी नीचे इसका जो ये है एनुअल इंडिविजुअल इनकम लिखा है ना
That's
यहाँ पे
right.
फैमिली इनकम करना
Exactly. That's what I was.
That is-
No, that's a family income.
So आप जगदीश जी फ्रॉम कंसल्टेंट परस्पेक्टिव आपको लगता है कि चाहे हमारी इनकम अगर ज्यादा भी है स्टिल वी शुड अप्लाई एंड लेट द गवर्नमेंट कैलकुलेट एंड डिसाइड
Yeah.
ओके हाँ मतलब मेरे जैसा देख के लगे कि नहीं
This is your benefit. Why do you want to lose that?
या ओके
And the bad thing of this old age is that if you live more than 6 months outside of Canada, it automatically stops payment.
Oh.
They don't pay you. It will be cancelled now. Now, before what happening? Before the Canada Revenue Agency, Service Canada, and Border Security were not sharing data or not tracking data. Before, what used to happen? We have a Canadian citizenship who just go and show our passport and border, go to America, fly out. There was no in and out record. Now they have an in and out record now, and they track everything. And they declare if you have gone outside of Canada, you may not know, but government knows, and they stop.
But it's a 6 months. You go more than 6 months, then only they did it.
As long as 180 days, they keep paying. After 181 days,
They will see.
they stop you. They don't tell you anything. They automatically stop paying you. And then when you come back, you have to apply,
Really.
reapply. And they'll review your all file. They tie up everything. Then this is given.
Next.
Okay, retiring outside. We have already spoken that.
Yeah, this is most sought out
Uh,
information. We are-
Okay, already. That's always happens when we started talking. Everybody jump here and there. That's what it's.
So,
Okay.
in this case, just from our community perspective, because हम लोग India से भी हैं, नेपाल से हैं, Sri Lanka, and so many other countries. So which are the most जैसे हम कहते हैं कि financial आपने बोला था कि tax treaty होगी. So जिस भी country में हमारी communities are they mostly that those treaties friendly as such?
Yeah, it's a friendly. For India, Canada, there's a tax treaty.
For Nepal, Fiji.
Nepal, we don't have.
You don't have.
Uh, But if you go to CRA, there's a list which country has a tax treaty where you can get the money back. There's a bunch of lists.
Okay, thank you.
So, old age, it's the same rule. 10 years you have to have here. After living a 6 months, more than 6 months, Canada, it will stop. But if you live 20 years here, then you can get your money when you live outside of Canada, but you have to tell the Service Canada all the where you are living, all the information. You have to let the CRA know, Service Canada know you are living outside. They can pay you, but you have to have a tax filing is always there.
That would be the reason that my mom went and we did not inform the CRA. That would be the reason. I can deduct it.
Yeah, yeah.
No,
That would be the reason.
I'm coming to the I'm coming to the third point where your most of your question will clarify. What may have happened in your mother case? She has gone and she was old age. CRA has no any information, or CRA may not have received her tax file.
She did not tax.
Tax file, so CRA have a doubt she may not align. That's maybe the reason.
Maybe now
And
listening
CRA has always prerogative rights to.
listening to the points, I'm coming to the conclusion, maybe.
That's maybe the reason.
Yeah.
So that's what it is. And it's a taxable amount. The beauty of the CRA is that you can go to the Service Canada, create your My account, and you can see how much CPP age of today you get, how much Canada pension plan you get, everything is there calculated.
Okay.
So always open Service Canada My Account, log in, create user ID password, and they send you a code. Once you put that code, it will be fully accessible.
Is that a temporary code or?
Permanent code. They'll send you a mail. And where you can see everything, what you are getting, how much you are getting, when you are getting, how long you have been receiving, everything is there. Okay, so there is a third component of retirement pension plan. It's called guaranteed income supplement. What does that mean is that government gives you a certain money to live as per the Canadian standard. But it comes with a certain criteria. So its first criteria is to get this GIS guarantee income supplement. You have been taking old age pension. That's mandatory.
What is that?
Old age security pension.
You must be getting that.
No, yeah. To qualify for the income guarantee supplement, you have been taking or receiving old age security pension. If you don't get old age security pension, you don't get this. The first criteria. And of course, you have to be a resident of Canada. Everything as a rule is there. So now in 2023, how much you get and what should be your income level? This is if you are single, widow, or divorced, even prisoner get this amount. Maximum monthly payment is $1,050 Your income has to be less than $21,000 a year. That is based, and they calculate based on your last year income. For 2023, they take your 2022 income. So if you are making a $21,000 lesser than that, and if you are single, widow, or prisoner, you get a maximum $1,057. Again, it's prorated based on the living, how many years you live in Canada. Similarly, your second situation you have, if your spouse, common law partner who receives the full OAS, your husband or your spouse getting a full US, you get a $632, $36. Your family income is $28,320. Again, if your spouse, common law partner, does not receive OAS, and your income is $51,000, you get $1,056. If your spouse, common law partner, receive allowance, then you get 636. Your income limit is 39,000.
What is this allowance?
Allowance is what happened is that if your wife is 60 to 64 and you do not take any old age or CPP, and if you don't work and your wife get old age pension, you get certain amount as allowance for your wife.
Okay.
That's what.
Simple income.
Okay.
Yeah.
Sir, before you go ahead, small question.
Yeah.
So this presentation that you have is a confidential or you can share it?
It is being recorded. So
It's being
you want to-
These are the data published in CRA Service Canada website. It's public.
Yeah, it is everywhere, but we are thankful that Jagdish has put it all together for
Yeah,
us.
I have organized,
Yeah,
but
he's-
it's open, it's published everywhere.
But yes, consolidated everything in one.
Yes, yes.
Yeah, that's what
And
it
he has kindly to get this recorded, so we'll have it on our IHF YouTube channel for our members.
That's allowance I was talking about.
Okay, okay, yeah.
That's
हाँ, मेरे को वो term मैंने allowance पहले
हाँ,
नहीं देखी नहीं थी,
it's the
so-
same thing. So how much allowance you will get? Again, certain criteria you have. If your spouse, a common law partner, is with the GIS, full OAS means you live 40 years in Canada, then you get a $1,343. Provided your income, family income is $39,000. Another one, if you are surviving spouse, common law partner, and less than $28,000, then you will get $1,602 as allowance. So that's the federal benefits, whatever we have. One of the questions for the it's applicable to husband and wife, both are working. Husband reaches 65, he started taking old age benefit. And if your wife not reached 60 and she's not working, then still you get low income guarantee if you have an income around $57,000. That's the suppose your wife doesn't work and your income is 57,000 and you are 65, then you can get this low income supplement, but it will be prorated.
Slide में
Now, which side did
ये actually, इसमें third point बड़ा attractive लग रहा है उसको।
Property,
which one?
आप आज घर
Third point
property
is
बना के जाओ।
senior property tax deferral program.
Okay, no, so I have spoken about the Canada Pension Plan, old age security pension, and the low income guarantees. So, do we have any question on that? Do you have?
I'm very clear on that.
That's it, sir. Okay.
I'm working so much with that. I'm clear.
Okay.
This has been very helpful, because अब अभी क्या हो रहा है कि पिछले 10 साल में या पिछले 7-8 साल में जैसे पेरेंट्स सबके पेरेंट्स ग्रैंड पेरेंट्स वीजा के अंदर काफी लोग आ रहे हैं, सो एवरीवन वांट्स टू अंडरस्टैंड कि जब हमारे पेरेंट्स यहाँ मूव होते हैं तो वो कितनी देर के बाद कोई बेनिफिट अवेल कर सकते हैं। वन इज क्लियर कि सीपीपी तो कुछ नहीं कर सकते।
Okay, so let me take an example. I'm living in Canada. I sponsor my parents. They came to Canada and living with me. They are not working. So up to the 10 years, I have given a government a guarantee.
Yeah.
Whatever it happens, I will take responsibility.
So because you are sponsoring, it will be your responsibility to take
Ah,
care of
both
the
of
parents
them.
for a number of years, and once they are here, then the starts, like my mom's.
After 10 years, they can live separate. They can get a old age. They can get a low income guarantee income prorated, but they will not get the Canada Pension Plan if they have not to work.
How much is the amount you
For what?
for the parents of parents?
It depends on the prorated. It's just, for example, normally it's not going to be more than $500-600 a month. In average, I'm talking. Hmm. Say it again.
Both of them,
No, each individual.
so
Yeah.
month or year?
Month. Yeah. But even during 10 years, you have a family dispute. You have your parents are feeling misuse, discrimination, humiliation. If they file against their daughter or son, the government will protect and give them a living cost.
They'll give them what?
Living cost.
Living cost,
Okay.
because they are permanent residents of this country anyway.
I have seen in Asian family, I have involved so many conflicts. What happened? They brought the parents and they cook food, they wash clothes, they take care of everything. They treat it like a servant here. And they get disputed and they ask them to go to work after when they come back, whether it's daughter.
Cash become.
Yeah, that's what happening. And there are so many people annoyed with this and they go to they get social service guy, they come, they do, and they go. Mm. Okay, second now the provincial benefits. I'm not gonna go in detail because it's already 3 o'clock.
Yeah,
It's 2:30. So dental and optical assistant programs. So that's one is the dental and optical assistant senior programs. You get now the government has come up with the new rules. If you have a family income $90,000, you can get a dental benefits. Not a major surgery like a cleaning kind of basic service is tax free.
They just started
Uh,
this year from July.
Yeah, so they have come up this. So this has been changed, but that will go up to the five. Alberta will give you up to the $5,000. So for your dental, this includes service such as examination, scaling, root planning, filing, extraction, root canal, and dentures. And then they give you the glass up to $230 each 3 years. But to get
Can you tell me, in Canada, any single shop which gives you prescription glasses for 230 years? $30.
Except for Costco.
No.
No, Costco is expensive.
350 only for the glass is my bill.
Yeah.
my answer is that I'm not aware of that.
They don't take cash.
They're giving you so much, save and buy.
Like they say.
So there is eligibility criteria. You have to be 65 years. You have to live in this province 3 years before you apply. You have to be Canadian citizenship. You have to 3 months. And in Alberta website, government website, you have to create their user ID password, and there is a chapter called Financial Assistance Program where you can go and apply, and they take your tax paper, everything, and they decide what are the benefits you get. 65, if you are working and you get retired, and $65 year is there is a Blue Cross insurance free. You don't have to pay the premium, but it will get coverage. That's basic coverage.
Yeah, they give the basic.
Basic, yeah.
And medicines also.
No, it's 70%.
Oh,
In this country, nothing is free. Whether we pay or the government pay, we have to pay.
Money makes the mail go everywhere.
70% government pays, 30% needs
So
to.
you have to pay, yeah.
Okay, so now your question, Alberta senior property tax difference.
Yes.
Program eligible. So this is also you have to qualify for the Alberta government, but this is not a tax benefit. They defer you.
Oh, this differ.
Defer means instead of paying today, they'll ask you to pay in future. That's why it's called tax deferral.
What's the benefit?
Because you don't have a cash flow right now, at least you don't have to pay
No,
tax.
it's for the seniors, right?
Yeah.
Seniors, if they don't have cash today, they will not have cash tomorrow because they are
They're
not
not
start working again.
They can sell their property. They have saving, they have a bond.
So
Property
that
pays
is
to
when
tax.
it's transferring to my kids name.
No,
that time-
no, look, it's we are looking from only from our perspective because we came to this country at the middle of age and we don't have a property, nothing, right? But think of the people who have lived in this and born in this. Think of our kids. They'll inherit the property from us, right? That's what we do. So this is the one. And second loan is that they give you a loan to repair, maintenance house. And to get all these things, you have to be qualified for that. The best thing is to talk to your social worker of your area. They will come to your house and they can, if you are really low income, they change your stove, they change your fridge. All these things can be given. That's
They just-
fridge, stove, and all these things.
Appliances.
Appliances.
So, Jagdish, when we say low interest home equity, how low does it go? Is it again based on that what we get from Bank of Canada?
That's what it is.
That is still the key bit.
Key point, yeah.
So what if in that case, both husband and wife die? So what happens to the property?
I think we have already explained you that if they have a,
Usme, in this low income deferred taxes made, I'm talking about this deferred taxes.
again the same situation. Whatever your property obligations are put in one basket,
It will become a loan.
वो
It
trust
will become a loan.
trust fund.
ट्रस्ट बनेगा, ट्रस्ट वो जो एग्जीक्यूशनर होगा वो जाके उसमें से पैसा लेके पहले गवर्नमेंट को रीपे करेगा सारे लोन
It's just a deferral.
जो बचेगा वो आपके बच्चों को देगा. आपके पास कुछ है ही नहीं तो वो बैड डेट करके राइट अप कर देगा.
So could benefit नहीं है इसका.
That's why they create a trust fund. Everything goes there. सारे उसको जाएंगे. जिसको लेना है, जिसको देना है देंगे. जो बचेगा बच्चों को देंगे या वाइफ को देंगे. This is the financial support. You get the money, low income house or the grocery and all this thing provided. You have to have a 31,000 income, and couple you have to have an annual income of 50,000. इसमें क्या होता है, they will give you grocery, they will give a rental subsidies kind of thing. They give you rent if you don't have a house, and if you don't give a government subsidy house, and if you live somewhere else, they pay you the rent subsidy.
Now, after 65, so like some of the, as per earlier discussion, my house is gone to my kids now, suppose. I transfer and dispose of it. After that, I am still living in that house. Can I apply for these benefits and make sure that I'm paying rent to my son?
Right.
What happened is
You
that,
understand what I say?
now I see what you are saying.
Now I don't have any house. I'm just living with me.
Okay,
I'm paying them
I
rent.
would have given you a very clear answer, but it's recorded, so I don't want to do that. I don't want to do that. That's a conflict of interest. You are manipulating government to get the government benefits, and that's not as per the law of gambling. Then everybody will do that. I have to transfer every property to somebody, and I'll ask government to give me everything.
So that is the case. That is the case when somebody is already living.
Hmm.
So जैसे parents किसी के बाहर parent visa पे आते हैं, तो वो आके अगर चाहती कि हमें 5 साल हो गए, now we want to go in and live, get a new house, तो वो कर सकते हैं because वो manipulation नहीं
Oh,
है.
no, that's
वो
a
तो
different
that
story.
is
That's a different. Okay, I was talking about the rent. These are the amounts you homeowner rent, lodge 3,600. Then you have a 12,000 long-term care benefits. You get a 12,000 max. But to get all these things, you have to apply. And the best thing is that talk to your area social worker. If social worker recommends you, government will give you so many things. Provided you have no money. You have 100,000 in the bank and you want to go for the government, doesn't work. The CRA will audit is called lifestyle audit. Suppose I have seen people driving Mustang and showing income $20,000. And CRA has access. They go to it's called lifestyle audit. They will go and audit and figure it out how you are making money. It means you are hiding income. You are doing something not legal, and they will pay you hefty penalty. So another thing, my experience is that it tells me that don't play around with CRA or Service Canada. Once you get into their notice, you'll be always there. So be careful, very careful to handle your things. And as I have already explained the supplementary accommodation benefit, what happened is that if you are low income, there's a housing, low income housing, you have to apply that and be in a queue, and they will give you a house or apartment or townhouse, and you will have to pay 30% maximum of your income to live in that house. That kind of thing. All this thing goes by the.
What if they don't have that 30%?
You have an income of old age pension, all these things. You have something,
That
right?
is what the
That is your income,
we are
right?
calculating basis.
Yeah. Whatever money coming in your bank, that's what it is. And if you are disabled, you have no income, then for your day-to-day health, government can assign you health care aid. 2 hours a day or 3 hours a day, they will come and do from the government side. Yeah, I have already, this is the new program government Alberta has started. Even federal government has started. In BC, everybody is getting a $40,000 to renew your basement in a rent out. Because if you are senior, government give you subsidized rate, 40,000 loan to repair your house, maintain your house, all these things. That's I have done Alberta, Edmonton. And this is the transit pass, Edmonton, Alberta is the same thing. You get transit pass and Thank you. That's what it is.
If you can this last transaction. Oh,
We have the similar things for every city has its
Yeah.
specific,
That's it. Thank you very much.
Thank you.
If you have any question or anybody
I
wants
have
to
one
listen.
question.
Okay.
Now with all these benefits and all the money that we're getting, approximately per month, how much it is?
But it depends on individual situation. It's hard to tell average.
Approximately.
Average, if husband is 65 plus and a wife is around under 60, it depends. Of course, it depends on, but I see around $1,400.
I think.
If husband and wife both 65 plus,
Yeah.
they get 2,000 plus, $2,400-$2,500.
आपने वो इनिशियल एक स्लाइड मिस कर दी है, ये थोड़ा लेट आए थे, तो वो
हाँ।
इनिशियल स्लाइड थी उसमें आपने वो फिगर्स दिया था कि हाउ मच मैक्सिमम $1,306 इज समथिंग monthly basis you can get, which
But
Jagdish
that's if you are living 40 years in Canada.
that is if you have worked not 40 years. If you have worked for 10 years, कितना
किस चीज के लिए?
जो आपने इनिशियल हमें बताया था सीपीपी का आप कैसे how much is where you stand.
Okay, क्या होता है कि for CPP, it's still recording?
Yeah, it is still.
Okay, okay. So what happened is that you have to live in this country minimum 10 years, and you have to have a one pay check as an employee or as a self-employed. What that meaning means, you have to pay or contribute something to CPP in your lifetime to get qualified to CPP. But if you pay a $200 CPP, then you're not going to get $1,300.
Yeah.
Maybe $10, $20. The more you contribute to the CPP, the more you get. As of the and this is what as of today for 23 CPP maximum people are allowed to get $1,305. That's what happens if you work 39 years in Canada, pay maximum CPP limit. What I mean by maximum CPP limit means each year there is a maximum limit amount you can contribute. If you contribute more than that, you will be penalized. For 2023, the maximum limit is $3,500. If you contribute $3,500 in 2023, let's say 2022, $3,200, 2021, $3,100, each year it goes up. If you pay full amount in your lifetime, 39 years of working life, and you live 40 years in Canada, you will get $1,306. Every year it goes up. But as of today, the Canada pension plan data indicates maximum people are getting is $770.
individual or family? Individual.
We're talking here individual. Family, no family.
CPP for individual.
No, everything individual here. Here, tax doesn't put you guys together except certain condition where family income is required. It's everything separate here. So that's what it is.
Jagdish ji,
Yeah.
I will stop recording here and we can answer a couple of your questions. But just on a thank you note, and I'm very thankful हमारी community की तरफ से कि आप हमेशा हमारे लिए volunteer करते हैं, and your guidance has always been great for us. And I will again like to tell our members your contact information so that you are, and we know that you are reachable and helpful for us. So Jagdish ji can be contacted at unit number 12, 4852 50th Avenue Northeast, Calgary, Alberta, in Canada. His email ID is jagdish@jc-accounting.ca, jagdish@jc-accounting.ca. Again, thank you so much, Jagdish, and thank you everyone for listening in and joining us. Jai Shri.
Jai Shri Ram. Thank you very much. Thank you very much for having patience to listen to me. Have a good day. Thank you very much.